Generation X will remember computers to be extremely large machines housed in very cold rooms. Then things turned around in the 1990s, when computing power first became scalable, then more portable, and ultimately affordable to the retail markets. Fast forward to today's technology, it is so pervasive that we no longer wonder of its promise. We simply use it. Communication does not need cables and can connect 24/7 practically to any part of the world. Information can be shaped, stored, shared from devices that we hold in the palm of our hands. And almost everyone can get enough of these gadgets that we have several of them at the same time. From malleable phones to the lightest tablets to inconspicuous earphones and gadgets that monitor your health, the consumer of today simply lives with, thinks of, and is defined by technology. All these have had a major influence on financial markets. For the retail consumer, the wallet that matters is the phone. It can pay obligations and transfer money. In calm or stress markets, financial consumers are reassured by seeing their balance and the ability to transfer in real time to family and friends who are in need. For financial institutions, information is the base currency for its constituents. Technology has shaped the competitive landscape, inducing financial institutions to hasten their own plans for an integrated and more seamless customer experience. For the investor, the changing ways that technology manages information can transform an option on paper to opportunities that can be acted upon. There is now greater leeway to make financial investments across national borders. Cryptocurrencies have become an investment option, and non-fungible tokens have been marketed as well. Various other digital assets are broadly available. Even central banks have jumped into the fray with plans for digital currencies. Corporations certainly are not passive bystanders. They understand that the physical market that they understood so well has evolved. This means that their product has to adjust, or at least their product delivery. What corporate solutions are needed depends on how fast one adapts to the evolving needs of its target clients. This also means that connectivity matters, the link from one counterparty to the next counterparty. Here, the philosopher Aristotle is right. The whole is more than the sum of the parts. This is so because transaction after transaction adds new layers of risk information which stakeholders act upon. Technology hastens those interlinkages, and understanding the market needs that holistic view. For financial authorities, we know that we need to adapt, not just adopt, but this requires a lot of rethinking. Economists are wired to know high-powered money, velocity, or the money multiplier. Now we ask how we should think of these when the very concept of money is changing. How can the bank supervisor mitigate bank runs if the withdrawals are done in cyberspace? As information moves with technology, will we only see the major breaches that materialize? Would we know of the smaller but probably many smaller glitzes that can chip away, add up, and eventually become a surprise? What can we learn with big data? How much of machine learning is in our future? Generative artificial intelligence is sparking a buzz, though some have shared cautionary tales. All these mean that it's a different market out there. It is defined by technology, used pervasively by a public that arguably knows only of a world driven by the latest technologies. Where do these take us? We have two panels who can guide us, a panel of CEOs who come from different fields, and a panel of regulators and multilateral agencies help sort things out. Listen to how they see the dynamics of the retail markets, the solutions that corporations increasingly seek, what investors see and don't yet see in digital assets, how traditional financial service providers are redefining their business space, and how contagion can be an amplifier of benefits and the reason for some caution. Appreciate what the authorities see and how they wish to position their institutions moving forward. All these in engaging discussions. Join us as our journey continues. Be there in Mactan this November for the 2024 BSP IMF Systemic Risk Dialogue.